Hello traders, this is Victor from TRADEPRO Academy, and in today's video I'm going to be talking to you guys about the truth of options day trading and swing trading, just options trading in general. That's because over the last few years, especially through the pandemic in 2020, we've seen that options trading has absolutely exploded. It's become massively popular, and there was a lot of volume that flooded into the markets between 2020 and 2021, right? This was on the back of the Fed's very expanded balance sheet that they now have to unwind through quantitative tightening, which has created the biggest problem of our generation. That is the super high inflation that they're now trying to fight. So when it comes down to options trading, other than all that macroeconomic stuff, there are truths that you do need to understand before getting into this world of options trading. And a lot of that has become very evident throughout 2022 and will become more evident as the years go on. It is a different world from what we're normally used to in terms of options trading, and that has amassed a lot of people into that community. So I want you guys to get ready for this video. We're going to jump right into an intro, but before we do that, why don't you tell me down below, when did you start options trading, right? Was it before the pandemic, or was it during, or even after? What did you experience throughout that time, right? How has it changed? You probably know. So let's dive right into this intro. After you smash that like button, hit that subscribe button, and let's go ahead. There's three main aspects that I do want to talk about this video in terms of the truth of options trading, and that's from an institutional standpoint, a day trader standpoint, and a swing trader standpoint. First and foremost, the institutional trader standpoint. Realistically, institutional trading is what drives markets, right? It's going to be big money that drives markets. But there are a lot of things that we do need to know in terms of options trading and institutional money, right? It's not as easy and as simple as everyone makes it seem out to be, right? It's not as easy as looking order flow, for example, and seeing, okay, institutionals did X, Y, Z. Institutional money is rarely directional in the options world. And in fact, they are very neutral, meaning that they take option strategies and positions that we're not very used to. They take complex option strategy positions. And now when we see these in terms of order flow, whatever website or platform that we use, we can misjudge it. It is not as clear cut as you think. Now, there are some institutions that do take directional positions and they do look for alpha in terms of maybe prop funds and hedge funds. But a lot of institutions have a different mindset where they understand that options, especially put options, are designed to expire worthless. So that lets you think alone that if put options especially are meant to expire worthless, then what does institutional money do if they're directionless and or neutral? Realistically, a lot of this hedging and a lot of the strategy revolves around selling premium. They either sell premium when options do expire worthless, or they're okay with certain positioning expiring worthless, which in turn really makes order flow fairly muddled because it's not very exact that you know what the exact positioning is of an institution. Because usually what institutions do, they use options in conjunction with their main positioning on an underlying equity, right? So you have to match the underlying equity to the options position and vice versa to understand exactly what they're doing. So they could be long, like, I don't know, millions of shares of SPY and then do a complex options position on the SPY, and you're thinking it's one way versus the other, directionally bullish or bearish, which may not generally be the case. Now, this is where a lot of retail traders especially get a little more confused, and it is a lot harder to follow these moves, these institutional moves, especially when volatility and volume drops off, which has been the case in 2022. This is an amazing time to be looking to sell premium, for example, but on the directional aspect, it may be very selective compared to in 21, for example, when we had these very strong directional moves and the Federal Reserve were just pumping money into the market. Growth names were jumping 10-15% a day, and there was a lot of them. Institutions also, being directionless, they do trade based on volatility and stocks volatility. So there's a way that they don't even care where the position goes. They just want to know, is the volatility on the position going to be very small or is it going to be large? What is that expected volatility? And they can trade options around that so they can take advantage of those moves, which brings the complexity out in the options world. So when you're looking at order flow, you have to take into consideration what are the different moving parts. If there's very directional order flow coming in throughout the day, then okay, great. It's probably going to move in that direction, but you have to consider how the institutions actually play the options to understand the complexity of this world and why we're dropping in volatility and volume over the last year in 2022 and continuously in 2023. A large portion of that is the money supply that is getting extracted out of the market, and institutions are still fairly confused as to where the next economic move will move. So that's why we've seen a little slowdown in the options world. So the second part that I do want to talk about is day trading options. It has become more complicated and difficult to get those directional moves, and it has become a lot more difficult for retail traders that have burst onto the scene over the last 2 years. That is because a lot of the volume, especially that jumped into the market before, is now getting extracted, and we're seeing way less money moving these assets, and you're not seeing general large movers where you could pretty much just pick any stock and you'd probably have a decent move in that. You have to be way more selective and realistically really narrow your list down to the very heavily traded stocks, because their options are going to be very heavily traded as well. Remember, throughout the pandemic, a lot of people were forced to stay at home, and that's where the birth of retail options trader came. I believe in like 2020 and 2021, we had a 50 to 30% or 35 to 50% surge in volume in the options market due to this. This also opened the doors for less complex platforms like Robinhood that were created that really serve this retail crowd. And realistically, a lot of retail traders are losers in the options world. It is a complex instrument that a lot of people don't understand, and they think it's as easy as just throwing a trend line down and being like, I can buy calls or buy puts at these areas, and not really understand how the positioning from the Greeks and other underlying factors works into pricing options. Now, it also stems from the understanding of institutional money and order flow, where again, it gets a little more complex, and especially newer retail traders that were born throughout that period don't necessarily understand that, which involves a lot more education. Now, that doesn't mean that there's no way to trade options as a day trader directionally in these markets, right? You can find consistency in that, and it does involve a few different things, right? You do have to do things a little differently than you might have before, meaning you have to be more patient, wait for these massive levels of interest, and maybe not even trade every day, right? There might be a few opportunities. Another thing that I've learned throughout this change of a period, because I was trading options even before the pandemic, is that you need to be selective in which underlying you trade, right? There are going to be underlyings that don't have that much volume, that don't have that much volatility, and those are things that you have to stay away from, right? Meme names or names that just like explode based on some kind of news. What I've generally stuck to is like indices and large cap, mega cap names, because they're always going to have volume and there will be some decent movement. Now, the other caveat is that you don't trade exactly every move. You wait for these big inflection points, and that's where we come up with our volume profile trading strategies and things around volume and order flow that you guys have seen so much on this channel. Remember, there's also different caveats and different factors that do affect the options actual pricing movement, especially as day traders. When you trade a short expiration, you're going to have to understand the complexities of the Greeks and other things that do affect that options pricing. Again, it's not as simple as finding that support resistance and just slapping it right there. There are other things to consider, especially from the institutional front, now that you know that a lot of institutions look to sell premium or look for premium to expire worthless. So when you're selecting options, you don't want to go super far out the money, or you don't want to look at these complex positions that you might see on your order flow tools like in usual whales and say, okay, this is directional for sure, because institutional money does play on volatility and options premium, right? Meaning that options don't move as they did before as a day trader. So that's one thing that you do have to come to terms with, and it probably won't move as aggressively as long as this quantitative tightening cycle continues. So just keep that in mind. There are news events and stuff like that that you can take advantage of, especially when you're trading ETFs. And I think a lot of people will migrate to options trading the SPY and the triple Qs as the months roll over. Names like Tesla are always lucrative and do have those movements. So keep those in mind. Now, when we talk about the final piece of information here, when we talk about the truth of options trading as a swing trader, again, we're bringing it back to how institutions work, because they are the main market drivers realistically. That's something that we do have to come to terms with. Now, in swing trading, I've noticed that it is, especially with the slightly heightened volatility with the VIX, it is a lot easier to actually look to sell premium and be a little less directionless. Or if you are directionless, remember, pick and choose your battles. That's why we have volume profiles, and really put a focus on ETFs like the SPY and the triple Qs. A lot of people have become accustomed to swing trading these illiquid names like meme stocks or whatever might be in the news or whatever looks fairly good on order flow, only to see that they don't move for a while and just get premium burn. That's what the institutional money does want from that. They want to burn that premium so they can collect it. So again, being a little more selective with the options that you trade based on news, based on high liquidity, based on assets that are traded on the underlying much more aggressively, you're going to find much more opportunity. And considering a little more of the complex option positioning where you do want to sell premium and act like the institutions do. That's one of the main things that I learned, right? If there's no eye-gouging order flow that really is directional, you might want to stick to the directionality on the SPY and the triple Qs if you're swing trading, because they do tend to pivot off large levels and they do have very large swings. Unlike some of the other individual names, right? Maybe you can focus on things like Tesla, Apple, Nvidia, all those mega caps for sure, but overall, selling premium mixed with the directionality of ETFs is one of the better ways to look at the market in the coming months and even years when you're swing trading options. So throughout this video, right, maybe you've learned a lot, maybe none of this is news to you, but ideally I've opened your eyes to something new in terms of options trading and the truth behind options trading. It's over glamorized realistically, especially on social media. And yes, there are ways to do it consistently and successfully, but you do have to understand what the underlying truths of day trading and swing trading are in respect to what the institutional money does. So I really hope you guys enjoyed this video. And if you did, I want you guys to drop a like, drop a comment down below. What else do you want to see? And hit that subscribe button, because we'll see you guys next time. More options videos on the way.